Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go and answer a question. It's from the website. I think there's a lot of value in it for me to answer everyone with it. So I'll read the question first and then give you my opinion after. So let's dive into the question. The question is, Dear Andy, subscriber from Australia, just listen to your question and answer session. I know you're bullish uranium. I've been a very long-term holder of next gen energy, bought at 25 cents and have hung on through all sorts of volatility, including the sell-off we are experiencing now. My questions are, and feel free to do this on your next update or question session, where do you think NXE is on the Lassonde curve, and where do you see NXE in relation to the other developers in the space, given they obviously have huge pounds in the ground that are unlikely to see the light of day this bull run? My temptation is to rotate out of this after next highs and into something else that may provide greater leverage to the upcoming bull run in uranium. I will have a huge tax liability in doing so. This needs to be taken into consideration. 25% out of the profits means you have to think twice about getting out, as that needs to be made up in the rotation and factored into any decision. What are your thoughts on this plan? If it was you, how would you play this? I have to say, even though they have created great returns for me to date, I'm not a huge fan of the NXE management and their extravagant salaries, spending, and option packages, and don't have great confidence in where they take things from here. Well, I mean, you talked about the Lassonde curve. I'll talk about that first. So this is the Lassonde curve here. This is basically the life cycle of a mineral discovery. There's two great areas of investments for people that are investors. Usually it's the exploration speculation phase, which is this first hump. Then we'll call it the excitement wears off, comes back down, and then this is your development of a mine phase. And this development of the mine phase down here is where NXE is at. There's actually quite a few companies that are in this phase here, where they're developing a mine. There's a lot of other ones that are over here that are trying to prove up the a deposit. And where this really happens is where they discover something and they actually define the discovery. That's where this big pop happens. This happens when they're building the mine and people are anticipating that coming online. This can continue to go up given the commodity price. So this could come back up and then we would see a big move. Ones that are closer to this stage over here would be something like a Paladin Energy. We've got Kazatomprom and Camco. They've got shut-in mines where they're just basically holding on to their pounds in the ground, and they'll eventually turn that stuff back on. I think they're kind of up towards this peak where they're getting priced. The valuation of that company is being fully priced in that their pounds in the ground, and we can see that. I've got a whole bunch of information on the website giving you the pounds in the ground valuations. And when they are producers, they are valued much higher than they are a development company. So the way that the valuation is for NXE, I would say, is somewhere in the middle of this over here, because they do have a decent valuation of pounds in the ground, and it doesn't put them at the bottom of the bottom. A lot of the Namibian companies are priced, I would say, lower for their pounds in the ground, given their deposit sizes. So on a dollar per pound basis, Namibia, I think, is very attractive. So when you look at NXE and you say, well, I don't necessarily like their management, I think that alone, if you don't like them and the management, what they're doing, that is strong enough reason to rotate into something else, in my opinion. But I have preferred and have a large stake in the Namibian companies. Some of them are in this region here in the development phase or right before it, the feasibility phase. And then some of them are also on this side where you can be at both of these locations simultaneously. You've got pounds in the ground, you're putting in a feasibility study, and you're also proving up your pounds in the ground. And there's a couple of companies that are like that. And I can put those companies in the comment section of your post. But that's where I think they're at. And I think, you know, if you don't believe in management, that's something that I would definitely follow your instinct on. Um, I do own Next Gen Energy though. I do think they have a monster deposit, so I have some money in it myself. I also have money in Fission. I have money in a bunch of the Namibians. I'm really spread out. I'm not trying to guess or try to figure out which one company is going to be the best investment. What I'm doing is I'm saying, okay, these are the ones that have traits that can potentially do very well in this next uranium bull market, and I own all of them. There isn't that many companies, so I tend to spread out, and I just want to capture their moves. If they go up 10 times, 20 times, 100 times, I don't know what the necessary outcome will be. It's difficult to say which company will be the best in this next coming bull market because retail is going to pile onto one of these stocks and it's just going to go into that one or two or three. Um, right now, it seems like the favorite is Encore Energy. There's a lot that are people favor that one. That is also developing a mine into production, and people have differing opinions on who's going to do well and who's not. But I kind of own a little bit of each, and I'm swinging for the fences. So I'm really going after the Namibian ones that have very low dollars per pound in the ground, and hopefully they can become expensive at the top of the bull market and get bought out by some foreign country. Um, so that's the answer there. And I'm gonna make some kind of other comments. I guess I've been kind of thinking about this. Another, it's not necessarily about just this. When I invest for the structural changes in the markets. You've heard me say that before. I don't necessarily care about the news. Even, I mean, the news can come out and it can change the fundamentals with some of the news, like reactors staying online, stuff like that. But I don't really, in all honesty, guys, like I don't. That's not what's going to push the market. It's not going to be the news. It's not going to be any of this. It's going to be the rotation of money. It's going to be the big money rotating into this stuff. And that's when things will happen. And that is financially driven for the most part. And I think the energy crisis is what rotates money in a big way. So the valuation of assets is a function of the market conditions. And the valuation or I should say, the valuation and rotation of assets during certain market conditions is what we're looking for. News, most of the time, it's not going to be what is going to cause a rotation of money. News, you can listen to all these people on YouTube. You can listen to the news. You can do all these things and think that you're up to date on everything, but it just doesn't matter to some degree. What matters is the market conditions and the forcefulness of money to have to move. So when I say that money has to move, it's the conditions where money doesn't want it can't sit in bonds and make money. They're going to lose. That forces people to sell bonds. It forces them to do something. And if you have an increasing interest rate environment, stocks also like to sell off, depending on how fast those interest rates rise, because it puts bonds into a real negative yield, and it strains the technology sector in some of these high growth areas where people are speculating, where basically they were forced into that sector because you could get no returns in bonds with such low interest rates. But now it's impacting all of those investments, those assets, and the market conditions are pricing those assets differently. So we're using ratios to determine the valuations between assets, and we're using the market conditions to determine where this money could potentially rotate. Now, I think the biggest driver of all of this is inflation and energy. Energy is a function of inflation because the way they measure it is through the consumer price index. And the consumer price index goes up and down based off of your energy costs. You can very well see that with Germany. Their energy costs have gone vertical, their CPI is going vertical. Now, the consumer price index is basically calculated on a year over year basis. So as whatever you're calculating against comes higher, it gets harder and harder to get large numbers. So we've had a very large inflationary, we'll say it, recognition in the consumer price index. It's on a year over year basis. That's going to slow down at some point. I don't think that the rate of change will be that high forever. So I think we're going to see a slowdown with the Strategic Petroleum Reserve releases. They came on the market, they slowed things down. And you're seeing that in a little bit lower inflation CPI number of 8.5% versus 9.1 or 2 it was before. Now, I think what's going to happen is you're going to get a little bit of a slowdown. People are going to change their mind and then they're going to rotate, I think, quickly. Because what they're going to do is they're going to find out that the Strategic Petroleum Reserve release will end and that I think natural gas is going to go higher as we get connected to the international pricing and then through the Freeport LNG terminal coming back online. And then I think oil is going to go higher after at any point here because they're going to front run this. The Strategic Petroleum Reserves will end in October. They were releasing a huge amount of oil onto the market continually. So it did have an impact. It did hold the price down for a short period of time. But once that ends, I think we're going to see the prices go back up. And I'm seeing in the markets across the board that things are firming up. They've broken down trends across all these commodities. We've broken down trends even in stocks and whatnot there. So I think they're gonna firm up, and we're gonna see an oil price run again. So I've been of the mindset that the crisis isn't solved yet. It's only been delayed through these strategic petroleum reserve releases. So I'm remaining holding tight in my oil, natural gas, uranium, energy type investments, energy service companies. Um, and I don't think any of these problems have necessarily been solved. Uh, you end you end these problems with copious amounts of inventory. You overbuild, you overproduce. We haven't overproduced. Our inventories are still very low. I think at some point, what you want to ask yourself, the question coming up in the future here is, what is driving a potential slowdown? In my opinion, it's going to be energy. Energy is going to drive a slowdown. Germany is not going to be a powerhouse with energy prices where they're at. Europe in general won't be a powerhouse. You're going to see a contraction. You're going to see a recession. But the recession is being driven by energy, and energy is the problem that needs to be solved. And your largest problems in the world will get the most attention and have the greatest opportunity for investment. So I think the greatest opportunity for investment is in energy at this time. That's why you're seeing Warren Buffett just pile into Occidental Petroleum or whatever companies he prefers. He's piling into it. He knows, he sees. Um, I think what I see and what other people see in the energy markets. He's done quite well. He did PetroChina last time. He piled into that, made 3, 4, 5, 600%, whatever it was. He did pretty well last bull market. So I think he's a good indicator and can accurately identify where the opportunities are in the markets. I think he's seeing the same things that we're seeing. If you're watching this, if you're looking at energy in general, so that's where the opportunities are. And if you guys aren't confident in the companies that you hold, and you can't explain why you hold them, then maybe you're holding the wrong company. Just like the question that was asked. If you don't believe in the management, if you think they're taking too much, then that's up to you. You can rotate out if you want to. In my opinion, the way to play this is the way that I look at it is we're in an energy crisis, and I'm going to go to the countries that can export their oil or natural gas. I think America can export natural gas, and I think Canada can export oil and natural gas. So I think Canada is a good spot to be looking for potential investments. That's how I looked at it from the beginning of this. And I continue to pile in those companies that have balance sheets that are improving dramatically, their free cash flows and whatnot. And then I also look at if they can grow production. If they can do both of those things simultaneously, you've definitely got my interest. That's where my money is been flowing here recently. It's companies that can increase production and increase free cash flow all at the same time. Some of these guys are increasing production 20, 30% clips year over year. That is insanely good. They're small cap companies, and that's kind of what I've preferred here. So if you're interested in playing this, those companies are in my portfolio. We talked about it the last Platinum question and answer session over a couple of those companies. That's in the description link below the website, Platinum membership. That video is released. You can view that video. It's Platinum members question and answer session video, 813. And you can see the companies that I talk about. There's a lot of other companies, and there's other companies in there, agricultural companies that I also think look pretty good right now based off of the chart patterns. Now, one last thing that I'm going to talk about, technical analysis. I don't really use relative strength indicator. I don't use moving averages that much. They're all lagging indicators. Sure, they can help a little bit. I just don't see much value in them. They never really worked out for me. What I do is I look at the actual candlesticks themselves and I look at patterns. And that's basically what I solely go off of. I also look at where the support resistance, basically where the trading has happened historically, and I use that as support and resistance. Resistance going up through it, support coming back down and getting on top. So I am a person who almost solely buys off of trend line breaks or pattern breaks. I also almost buy off of support. So we come down, tackle, hit support, and then kind of stabilize in that area. I call it the dead period, where it doesn't really move up or down. It moves sideways in a tight. The volatility really comes down tight. I call that the dead period, and that's where I load up. I'm using signals that you can't necessarily see in lagging indicators that most people use, like relative strength indicators and all that stuff. And those are good to use to see, if you're within a trend and the trend's continuing or something like that. But I'm looking at the leading indicators that I know. Other people may say that what I look at is immaterial and it doesn't work. That's fine. It's worked for me, and I've had a lot of very good entry points. I look at the candlesticks and how they interact, large up days, small down days, and a pattern that basically comes about, which shows me that the buyers are in control versus the sellers. And I use all of that information to make decisions on if I should be buying or not. And then I also use ratios and market conditions at my back. And basically, I don't know if there's anything more that someone can do. So I'm looking at market conditions determines the valuations of prices. It'll determine where the ratios will eventually end up. And ratios tell you where the money is and isn't. So if that's something that interests you, if you want to learn about that and you want to get better at trading and investing using those types of signals, then definitely subscribe to the Platinum membership in the description link below. You can learn all this. You can ask me questions on the weekends. And that's where I think the value is. And the more you learn about it, the better you get at timing your purchases, your entry points. That's where you make all your money. And you'll be able to hold on as well because you can monitor your investments as well, knowing this. So that's what I have for today, guys. Give me a thumb up for the content, subscribe to the channel, and we'll catch you next time. This is Finding Value.